Hi, this is James Shug with Westpac London's end of day report for Tuesday the 12th of February. Positive day mostly in equity markets. We had the G7 finance ministers and central bank governors issue a statement on exchange rates. Now, the last time they did this was in 2011 and it was a little bit more forceful. They basically reaffirmed that fiscal and monetary policies have and will remain oriented towards meeting respective domestic objectives using domestic instruments, and that they won't target exchange rates. Now this follows the sharp depreciation of the Japanese yen since the new government there implemented policies that have seen the yen weaken sharply. So, but they were aimed at the deflationary Japanese economic environment. So effectively condoning those policies. Bank of Canada Governor Mark Carney said that the G7 hoped that the broader G20 later this week perhaps might endorse that sentiment, particularly some of the larger emerging market economies, read China. On the economic data front, the UK CPI was steady at 2.7% annual for the fourth month running. Remember the Bank of England last week said that the UK inflation could remain above the 2% target for the next 2 years, but that was due to a sequence of temporary but one-off factors, and that it would be appropriate to look through those factors when setting monetary policy. So we've got the inflation report, the quarterly inflation report from the Bank of England tomorrow. We'll get more on that there, but persistently high inflation doesn't seem to warrant any sort of policy response anytime soon, it would seem. Other data, the small business confidence in the US edged up from 88 to 88.9 in January, a second straight rise, but goes nowhere near reversing the near 6-point drop that we saw back in November last year. Election, fiscal cliff, the March 1st deadline for the spending sequester, all these issues seem to be weighing heavily on small business sentiment, perhaps more so than larger businesses in the US. So that's about it in terms of the news. On the earnings front, a mix in Europe. L'Oreal had good earnings results. Saw the cosmetics sector in France marked higher. Barclays have announced nearly 4,000 job cuts. That saw their share price rise in the UK. Michelin was disappointing in France. A mix in the US. An analyst downgraded Facebook, which is why the Nasdaq is, I think, the only market I'm going to mention that's actually down today. So, in fact, I'll give you those markets. The FTSE at just before 4 o'clock in London, so we're still not quite at the close, is up 0.75%. The French market up just over 0.5%. The Germans are up 0.25%. Spain's up 1.1%, and Italy up 0.33%. The Dow's been sort of modestly positive, up about 0.2% at the moment, just over 14,000 the level of the Dow. The S&P 500 up 0.1%, and in fact the Nasdaq, it's also up 0.1% now. So that underperformance there seems to have unwound. In commodity markets today, the gold price is unchanged at $1,649 an ounce. Oil was up 0.5%, $97.51 a barrel, and copper prices are up 0.5% as well. The Aussie dollar, it's up around half a cent since the G7 communique came out. That was about 6 hours ago, and the Aussie dollar then was around 1.023. It's now 1.029 against the US dollar. Actually rose above 1.03 briefly. So we've got the State of the Union address coming up from Obama later tonight. We've got Australian consumer sentiment in Sydney on Wednesday, and we've got the Bank of England quarterly inflation report tomorrow, and the US data starts hotting up as well with some first tier data over the remainder of the week. All right, I'll be back with more tomorrow.